What is good, boys? I was just back testing and I saw a setup that I used to take all the time that was just super easy to spot. Um, has a really high win rate and doesn't take a lot of discretion to see. And it's actually the model that I give credit to passing my first account, which was like the first week that I ever just like put lockout settings on my account and just locked in, followed my rules, one trade a day. Um, But yeah, definitely going to be going over some sauce in this video. Super easy model for you guys to use if you are just starting out, and it'll help you gain your discretion. Um, and overall, just definitely a video worth watching. If you are still deciding on a model you want to use, give this one a shot. Very high win rate, very easy, and it will help you pass your first account, or maybe even get your first payout. Actually, this is the same one that got me my first payout. So leave a like, subscribe. It would really help me out if you guys did that, and I will do my best to give you guys as much sauce as possible in this video. Alright, so we're just back testing right now, which means we're on dead charts. These are not live charts, but it is the exact same thing as real trading, except it's just past tense, not making real money. So before we actually back test this strategy, I'm just going to show you guys what it looks like super quick. So let me get the brush right here. All it is a continuation model. So if we're continuing towards a draw on liquidity, we're waiting for a rebalance into a key level or fair value gap, and then a inversion out of that. And we're specifically looking for the 5 and 15 minute time frame. Super easy, like literally there's a few rules that we'll go over, but we're gonna get right into it. I'll show you guys the one that I just back tested, and then just to prove to you guys that it is a model that appears a lot, and that it wins a lot, we will do some back testing on. So let's get right into it. We're gonna go back to the day that I just back tested, back to here. Alright, so step one for the model, we need to find an obvious draw on liquidity and identify if price is delivering towards that draw. And it's just super obvious. Like, it shouldn't be like like, I don't know, like, kinda. It should literally be like so obvious, like, that you would get mad at yourself for not taking it. So what do we got right here? On the 4-hour time frame, we're trading inside of this imbalance. We're coming up on the midpoint here. When looking at this, it's safe to say that it could be bullish or bearish. So you wouldn't really have a bias yet. This 4-hour and how we close inside of it or react off of it should be your condition. And you can even do the same thing with this hourly gap. We closed inside of it, so now we might be leading a little bit more towards bearish. And we could use these gaps right here as a condition. And that means I'm telling myself before it happens, if this gets respected, I will look for shorts down to the next PD array, or I will wait to see what happens off of the midpoint of this range. And if it gets inversed, I'll be looking for longs to these highs. So we'll see what happens. Market is about to open. Market just opened. We tapped into the 1 hour and we rejected out of it pretty hard. So now we are going to just chill on the 5 and 15 minute time frame, because we know we are heading down. If we really want to be picky, we can mark out the equilibrium of this range and watch how it reacts off of there too. So we just did hit equilibrium, so there's still a chance that we could take longs. We will be monitoring that right now. So let's see what happens. We're on the 5 minute. Okay, so this is now a 5 minute gap. This 5 minute gap, if we are bullish, should be disrespected and inversed through back to the upside, taking this protected high. Let's see if that happens. And if not, if we come down off of it or leave it, it means that we're going to be bearish towards these lows right here, which is into a higher time frame PD array that is unfilled. This comes with discretion, but a point like this, I've seen it happen a million times. if there's lows leading up to an unfilled PD array, it's very likely that we're going to visit that area, especially if we're trending towards it. So we got our 5-minute gap. Let's fast forward. Okay, we're leaving it behind, still going down. So we are now expecting that price is going to keep dumping to this draw, this gap right here, or this gap down here, or this gap right here. Could this area be revisited? Yes, but we would expect price to continue to be bearish off of it. Alright, so now this is a 5-minute gap right here. We hit that gap that we were talking about. Let's see if ES hit it. ES has not gotten to that point yet. So this is the area that we're looking at right here. This is it on ES. So ES hasn't got to that point yet. So we can definitely still be bearish. What do we have to look for against the bearish bias? Watching to see if this gap is inversed or respected. Let's see if it's respected. So far not being respected, and then we get that inverse right there. So this would be a 2-minute inverse. The candle hasn't closed yet. We want to be taking the highest time frame inversion out of that PD array. So just to recap, we have an obvious draw lower. ES needs to take these lows, and we still have draws like this unfilled gap and this low down here. Next, we are waiting for a rebalance, and we got that. That's a check. We rebalanced into this PD array right here, which is a 5-minute. We don't have a 15-minute yet, so we don't have to be too cautious and worrying about a 15-minute being rebalanced. We can kind of trust this 5-minute that if it is disrespected and we get an inverse, that we will continue lower. So let's see when this candle opened. It's a 2-minute candle and opened at 9:56. It's now 9:57. We can wait one more minute, or we're not going to take this because it needs to inverse this gap. We'll click through one more candle, and that is going to do it. We just closed the 2-minute gap right there, so now this is an inverse fair value gap coming out of that rebalance. This is a trade that you would take. Now, if you want, you can put your stop at this low, and you just have to you would just have to take off some of your risk. But me personally, I'd rather always keep my risk and just move it to a 1R and put my TP down there. We're going to enter into the trade. We're going to sell one contract. Wait for it to load. We're going to drag our stop loss up and go to here. So the reason why this win rate is so high is because any internal high that is going to be taken, we're going to go break even off of it. So this internal high just got taken. Something like this, if a candle closes like that and it's still bearish, you might want to wait for confirmation to go break even. But for the purpose of the video, I will stay keep my stop where it is. But normally you would go break even when taking this internal low, or if we took something like this. But we'll keep clicking through. Alright, so now that we've confirmed below it, it's looking pretty good. You probably would have gotten break even on this, but that's not a losing trade. If we confirm below this low, get a candle closure below here, we will go 100% break even. Alright, so we just manipulated back up into this 2-minute where we got that inverse and moved down. So now we'll definitely be going break even though we didn't take this low yet. That's just enough for me to go break even because we manipulated back up and flushed back down. We should not do that again. So if we do that again, it's likely that we'll get stopped out. So we're going to just move our stop loss to break even, and we hit TP. Could you have put your take profit a little bit lower, like maybe this gap right here, which would have gotten hit? You could have, but the safest bet is always to just go with a 1R or target the internal low. So that's a pretty good example of the model. And it's super simple. Like if you look at it on the 5 minute, all we did was we're trending down, we retrace into this 5 minute, and we get an inverse out of it. We took the 2 minute because it's the highest time from inversion. You could have taken the 1 minute too, entered right here, and put your stop up here. But yeah, we're going to keep going through this day. It is only 10 o'clock, so we have about another hour to trade because I usually get off at around 11. We're going to go back onto the 5 minute. So now ES took that draw that we were talking about, but NQ is now obviously trending down towards this low. So normally you'd be done on the day, but we're going to keep looking for that setup, see if it happens again. It looks like it literally did just happen again. Even better, we are now trending towards this unfilled gap on ES. Literally same thing, guys. Obvious draw, we're trending towards it, good delivery. And same thing, we got this inverse right out of here. Let's check to see if we have any 15 minutes. We have one up here. We are a little overextended, so this is a time that you would be a little bit more cautious. But for the purpose of the video, we're talking about this model, so I'm just going to take it anyways. I haven't taken this yet. I don't think. I don't think I took this when we were back testing it. So this is a trade that actually has a really good break-even point. But once again, this is going to be one of the lower win rate ones because we are overextended and have a 15-minute gap above us. So that's going to be our break even. We're going to enter in with one contract, sell. And as soon as we hit that line, we will go break even. Right here, you can either put your stop at this candle body high, because if we come back up, it's likely that we are going to come back up to this unfilled 5-minute. So in order to just have good risk to reward, I'm going to put my my stop right here. Take profit will be down here. Alright, so that's break even. Even though we're very close to it, that's going to be a break even. It's most likely going to get stopped out, especially the way that this candle closed. Alright, yeah, so that's a break even, which is still a winning trade. That is a green day for us. We followed our rules, boom. Took out that low, and now let's see what happens now. Alright, so we just inversed this gap. This isn't the model that we're taking, but this is definitely another model that I used to pass my first account. This would be a mech model. We are inversing a leg that just manipulated a low, and there's an unfilled 5-minute gap above. We're not going to be taking this just because it's not part of the video. We are not taking this model, but I'll put the P&L tool on the screen just so you guys can see. That's the unfilled gap. I don't really like this right here. See all those wicks lined up like that? When that happens, it's likely that we're going to come back down. So I don't expect this to hit 100% of the time. This is something I wouldn't take, but it's just worth charting out. So you'd be break even now. And you would have hit TP. Let me just rewind real quick and show you guys the model presenting itself again. What do we have right here? This is an obvious imbalance. I can tell just by looking at the 1 minute that there's going to be a 5-minute there. We are inside of a 5-minute that we already rejected at. We got the CISD here, so we're currently disrespecting this 5-minute gap. We are expecting that we're going to go back up to this unfilled 5-minute. So this is a little bit less probable of a draw, but we have a draw that we are obviously going towards now. We have the CISD, and now we have a 5-minute. Are we going to get some manipulation into it? Yes, we do. This wick manipulated us into the 5-minute. Now we are going back towards up that draw that we just marked out. Now we look for our inverse. We just got this inverse right here. We're going to put our stop right here. We already manipulated into the 5-minute. If it comes down, it's likely to hit our stop and then go back up because we already barely touched the 5 minute. But this will be our trade. Buy one. Oh, didn't put our stop there. So that's going to be break even. We just took the high. And this is a very cautious trading style that we are doing. So it's going to suck to know that like sometimes you're going to get break even, but you see right there, it saved us from going even more into drawdown. It looks like the trade still would have played out if we didn't go break even, but that is how you perform the model. Losing money is always worse than making no money. All right, it is now 10:55. We're going to move on to the next day. 15 minutes. We will do, we'll wait for this setup to present itself one more time, and then we'll wrap it up. So next New York session. And guys, this setup is always going to present itself best around 10 o'clock. If you see 10 o'clock manipulate into a 5 or 15 minute and then we get an inverse out of it, that's high probability. You don't want to be taking it off market open because it's very volatile and there's a high chance of you getting stopped out. So what do we got going on here? Let's find our obvious drawn liquidity. Looks like we are trending down. We have unfilled gaps up here like this 4 hour. If we do go up, that can be a target for us. Same thing with this 1 hour, but for now we are going down. Even though we're rejecting up, we have these draws down here to look at. Nothing crazy when it comes to SMTs. Alright, let's watch market open play out, see what happens. Coming down out of a 15-minute gap. Now we're disrespecting it. Market has opened. Alright, now this right here is where you can get caught up and confused because we did manipulate into this 5-minute gap right here, but watch what happens. There's no gap to inverse right here. There's no gap for us to inverse. So there's also, that means that there's no entry. Where did we manipulate down into the 5-minute? Okay, so this candle brought us down into the 5-minute and we come up. Let's just say you took the CISD. This is why you go break even when we take the internal highs, because we can come right back down and it's a lot nicer hitting your break even stop than your actual stop loss. So now that we've rejected from this 5 and 15-minute gap down towards these lows, we can start looking for our continuation model. And if we do turn around, we have good draws higher. So we have some no 5-minute gaps yet. Alright, so we are manipulating up into no 15-minute gap. There's a 5-minute gap right here, but we are currently running straight through it. So we'll watch what happens on the lower time frame. We just ran right through it, so no trade here. Just gotta keep looking. And this is the tricky part. You just gotta be patient, stay on the higher time frame. We now have this 15-minute gap right here with these highs resting above. If we can get a nice manipulation into that, we can probably catch an inverse out. In which we did right here. There's probably a 30-second gap within there that got inverse. No 1 minute. There is a CISD, so you could enter off this candle close because it closed off of this down candle. And we did just take out all these lows into the 15-minute. But we also did just take this internal high, so we have to be careful because there's a chance that we could reject down. We also have unfilled 15-minute gaps below. So we're going to want to see if this 2-minute gap gets inversed. and it got tapped into and we went down. So now we're going to see what happens now. We just manipulated down, took out that low inside of the 15-minute gap. So now that we rebalance that 15-minute gap, we can look for an inverse up. Alright, we just got an inverse up here. This price action is looking really choppy. So this is not the ideal conditions. When price looks like this isn't when we want to be trading. I swear price already tapped into this gap. Was I tripping? Maybe it was the 5-minute that I was thinking of. Huh. That's weird. Anyways, so this is still the model. We are obviously trending towards these highs. We did already take these out, so it's a little bit sketchy, but we just manipulated into the 15-minute gap, took out all these lows right here, and inversed up. This is going to be our break-even point. And we will put our stop at the bottom of this candle low, because if we come down, it is likely for us to hit this and go back up. So we want to make our, if it goes against us, we do not want to hold it all the way to the low. We're going to enter in with one contract. We'll actually move the stop down to here just a little bit. And once again, if we take that internal high right here, we will go break even. So that is going to be where you go break even. For the purpose of the video, I'm going to wait until we get a candle closure above it, just because it's more confirmation. And me just having traded this model for a while, I can kind of tell when that's going to happen. But if it does come down now and stops us out, we just have to realize, okay, maybe it would have been smarter for us to just go break even. Oh my gosh. Yeah, so right there, let's just rewind it. I didn't do it. It's not technically like breaking rules, but if you feel like you're confident in this happening, you might want to keep your stop down there. But since we did take the internal high, watch how it saves us. Saves us from losing that money because we went break even after taking this internal high. So even though we are wrong and price action just is not playing out how we thought it would have saved us. So now it is 10:50. So this is what I was talking about before. Sometimes we take out the lows inside of the fair value gaps that we rebalance, and then we come right back up. So it can be stressful and hard to miss out on these. But this is outside of when we normally trade. So we're probably going to wrap this up. Well, this 5-minute just did get rebalanced. So we'll watch the reaction out of it, and then we'll wrap this up. So it did get an inverse here. But since price action is so choppy and it's hard to predict, on this day, you definitely wouldn't take this because it's 11:23. But we will take it just for the heck of it. Got our TP up there. We got our inverse. Is there a higher time frame one? Yes. This candle opened at 11:22. It's only 11:23, so we do have to wait one more minute to see if this closes. Let's see if this closes. If this closes bullish, inversing this gap, it would be a model that you would take. So yes, this is where you would enter in. You would be break even now, and that would be a break even trade. After taking these highs, you would go break even, and you'd be break even. And once again, it's just super simple. Like if there was a 5-minute gap up in here, you would take this inverse out. Boom. Then you'd be break even there. You'd get break even. So there's going to be a lot of break even trades with this model, but that's the thing about it. You are not losing. We are only winning and getting break evens. Give it a shot, guys. You have to be disciplined with this model and ready to put your stop loss to break even if you think it's going to get hit. But this is just probably the most simple and least discretionary high win rate model there is. You just have to be smart with it. And yeah, give it a shot. This is how I passed my first funded account, got my first payout. So hopefully it helps you guys out. And obviously, if you guys made it to the end of the video, drop a comment, let me know something, ask a question, and a subscription would be awesome. I feel like I'm always begging for subs, but it does really help me out. So if you guys could drop a sub, that would be awesome. But for now, have a good day. We will see you guys tomorrow. Peace.